Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elkanen.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, traders and investors. Welcome to Thursday's edition of Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elkanen, along with Dennis Dick. We have Chris Deerscar-Lease working the boards in place of Spencer this morning. A good show on the docket today, as usual. We will talk about Veritone and the Citron tweet. That stock deep in the red yesterday. We'll see how it reacts today. New all-time high in the S&Ps, but not a new all-time closing high. We'll keep an eye on that level. FANG bites back, so we'll talk about some of those stocks, the rally that they had yesterday. Dennis's good call on the banks. We'll also cover some earnings from Jabal Circuit and Dennis's favorite store, Pier 1 Imports. At 8:15, we'll be joined by Marc Chaikin, the founder of Chaikin Analytics. Get some trading tips from Marc. And at 8:35, we'll be talking about the dollar with Lydia Idem Finkley, a Forex trader and the author of fmitefx.com. Good morning to you, Dennis. We got a little action here today.
Yeah, can you break down the overnight action in the E-minis and the gold and the oil, Joel?
Oh, yeah. 25.
Joel did Spencer's part, so he forgot to do his own part.
Okay, Dennis, I got that.
I'm going to give you a hard time. You know I always do.
Yeah, I'm going to strike back today, though, with a steak. The all-time high in the S&Ps was made yesterday at 09.25. That's a big target on the upside. The all-time closing high was 5.25. We closed yesterday at 450, but overnight highs right in that area. So, folks, I can't stress enough. We still have the same highs right in that 25.05 area. Crude getting another bounce. I had that breakout over 51, 52.88. That's your high. 51.86 the low. Maybe try and get in the 53 handle today. And gold and silver are flat here. Gold only up 60 cents, 12.8830, and silver now below $17, up a penny at 16.84. Good morning, Dennis, to you. How was that S&P crude and gold wrap there?
Yeah, good job. You did a nice job on everything here today. So far. And we no technical problems here. Joel, you're doing good here. Let's jump over into the individual movers of the day. And there's a lot of them. We've had a lot of earnings reports. We've had a lot of upgrades and downgrades here. We've got a lot of other individual stock news too, but I do want to start with a stock you talked about right off the hop. Veritone, VERI, has the epic collapse yesterday. This stock, if you haven't been following the story, it's one of those AR plays. Barron's wrote an article on this back at about $9 or $10. Joel told me about it when it was 19, and I was like, we were talking about AR plays, and you told me about the Barron's article, and that one of your buddies liked it too. And I was talking with my other buddy about it because we were looking for AR plays, and I thought about buying it, but I was like, you know what? It's kind of went up too much. It's went from 10 to 19 in a couple of weeks here from that Barron's article. I'll wait for the pullback. My buddy pulled the trigger and bought it. He was the right move because obviously that stock has just blasted off into orbit in the last 3 weeks, going from 20 up to over $74 yesterday. Now, if you look at it this morning, it looks like a 2-for-1 split, but it's not a 2-for-1 split. It is our friend from Citron, the bubble buster, Andrew Left, tweeting about this yesterday.
Oh, my Lord. And what did he say? This is not artificial intelligence. This is real stupidity. Was his comment. Which
you got to give him credit. He's pretty funny, with these tweets. But I didn't even see an article on it. This was just a tweet.
Oh, I know.
The tweet and the epic collapse. I mean, I'm going to say it right now again. There is no one on the street right now, not President Trump, nobody. There's nobody that's more influential than this guy. When you talk an individual stock, there's nobody that can knock a stock down 35% just from a tweet. He is the most influential person on the street right now. And should he be? I don't know. He's a pretty smart guy, but it must be nice to have that kind of power. I mean, here's what you do, his whole play. Oh, I can short the stock. Okay, now I'll just tweet about it. And it's going to dump. And it's like, it's going to dump when you tweet it. So, I mean, he's just playing his cards, and congratulations for him having such a great following to be able to do that. But Andrew left from Citron's most influential person on the street.
And we just got to talk about the timing of this one. I mean, he must have some kind of overbought indicator that is just absolutely amazing, because this thing peaked at 10:04 at 74.92. And it was actually just hanging up there in the 70 handle. And then at 10:51 to 10:54, you had a 3-point drop. All right. Now, the tweet came out, Dennis, you said closer to 10:55. So it
10:54:44, I believe, was the time of the tweet.
Okay. So you're
saying it fell for 3 minutes before the tweet.
That's what I'm saying. Exactly.
Somebody knew he was tweeting.
Exactly. Yeah. Someone at Twitter is rich right now because they saw that tweet coming through. But
I mean, if you got the tweet and the tweet came on, the stock was still 68. Obviously, there was a lot of meat on the bone because the stock is now $43 here this morning. And, there's these things. It wanted a catalyst to go down. It really did. I mean, these stocks don't go straight up. So, and it's not like any stock, if he was just tweeted about it would fall 36%. This thing had everybody in it. This was, the gravy train for all the day traders. They were buying and buying and buying and buying. And this is what happens, the fallout from it. So, these things always happen. There's always a catalyst usually that makes it happen. Somebody says something or an analyst comes out. Well, it was Andrew Citron, and he's obviously, or Andrew Citron. His last name should be Citron, shouldn't it? But Andrew left. And from Citron, and that's the most influential person, like I said, right now. So it couldn't have been a worse perfect storm for VERI. Stock trading up near the all-time highs, and boom, kaplooey, Joel. I said it for you.
What about your buddy? I don't want to mention his name, but did he have a sell stop in, or did he exit, or is he just holding on?
He actually sold, believe it or not. He is selling all the way up. So, just leveling out of it. He actually sold, I guess he said, his last shares right on the open yesterday at $72. Oh. So, but then he was rebuying. In the pullback there. So I think he's back in again, just saying, he scalped a quick 20 points or something because it fell so quickly there. So, wow. Nice trade by him, obviously, to sell it up there right before that. So Ace is saying he wants some credit because he was saying to be cautious up there. So good job, Ace, telling everybody to be cautious. I think this was coincidental, obviously, because the Citron tweet is the thing that drove it down. But you got to be cautious. Ace has a good point. When these things are going up from 20, 30, 40, 50, 60, 70, I mean, eventually there's going to be a collapse. It has to happen. Things don't go parabolic like that and don't, have some type of, significant pullback one of these days. This thing was straight up for 2.5 weeks, basically, tripling in that time frame. So not surprising, that we do get a significant pullback. We're pulled back again here this morning. The 2-day move coming into play here, guys. Yep. So if you're thinking about that, this is a move, a counter move, and the 2-day move, something I talk about on the show all the time, something that I've, patented myself or created myself or just, pointed out myself, is that the fact when you get, a hard trend in one direction and then a counter move to that trend, it often follows through the next day. Reasons because the Johnny-come-latelys come and, they're people that have day jobs, might have been in the position, come home that night, like, what happened to my stock? They come in the morning, they want to sell, and they get me out. So if that is the case, I would look for VERI to turn somewhere, shortly after the open. Now, this is a hard stock to call the bottom on, but if you think, this is, a great buying opportunity, you're getting a little bit cheaper here today, and I wouldn't be surprised to see a little bit of weakness again at the open. But a lot of times they do turn somewhere between 9:45 and 10:30. Buyers start to emerge. If this was typical, if this is, but this is, a whole different animal here. This is all high risk, all speculation. So you got to be very careful. But speaking of Veritone here, there was somebody who wrote an excellent article on Seeking Alpha. I'm going to go try to find this actual article here. This came out yesterday, just coincidentally. I'm going to give the guy credit there. So I was reading Seeking Alpha. It is by... Oh, who is this by? I can't even understand how you see who this is by. Anyways, I think his handle, is this right? Studiso Research? Studiso Research, he's calling himself. Anyways, he wrote an article here, and I'll post the link there. It's why buy Veritone stock when Acacia Research, which is ACTG, is trading at a substantial discount to book value. So ACTG owns a whole pile of VERI stock. So they're saying this is, kind of the safer way to play it. From his research, he says that, and I didn't verify any of this research, it's just from the Seeking Alpha article, that ACTG owns 4,119,521 shares of VERI. They also have warrants to buy another 809,000 shares. So they basically have exposure to 5 million shares of VERI. When he does all the math on this, he says, and this was when the stock was trading up at 70 yesterday, so you got to do some adjusting here because the stock is back down at 44. But when you do the math, he's saying that this ACTG is actually trading for less than its value of VERI, than like its holdings in VERI. So he's saying this is a better way to play. And if you put the chart of ACTG up, you can see the rally it's had as well. It started September down around 325 and got over $5, 540. That is, because other people know this as well. And, this is, basically just playing a little bit of the arbitrage there where they're buying ACTG with VERI. ACTG is trading down here again today because VERI is down. But if you want to trade it a little bit, less volatile stock, but get a play off of VERI, it looks like this is a good way maybe to potentially to play it with ACTG.
All right. You know what I'll go to here, Dennis? We'll go back to the VER chart, and 50% retracement, believe it or not, Dennis, comes in at 41.50. You had to move from 776 low, let's call it $8 up to 75. You take half of that move, that comes in at 41.50. Now that'd be a great place to cover short. I'm not so convinced about going along. We got to see some numbers out of this stock. We got to see some earnings. We got to see some innovations. So a great run in that issue. I'll caution in that today as well. All right, we got a guest on at 8:15, Dennis, and that's going to be Marc Chaikin of Chaikin Analytics. Do you want to see if we could get 2 earnings stocks in that time?
I want to say one other thing here, just because I've got my Skype is getting lit up here right now because everybody's like, is this link you sent safe? Somebody hacked my Skype at midnight last night. So my Skype account was hacked last night. If you are a friend of me on Skype, do not follow that link. I don't know what it is, but they hacked my account. They sent out a link. Microsoft actually is pretty good here. So I got an email this morning saying somebody else has been on your account. So I changed my passwords and everything, and I've got access to my account there again now. But the hackers are out there. We know EFXX or EFX, was hacked. Well, I just got hacked as well. My Skype account was hacked here overnight. So just don't click that link for my followers there. And the hackers are out there, Joel. Maybe we should be buying these cybersecurity stocks.
Okay. All right. 8:14, you want to do one earnings report?
Oh, you must want to get one in really quickly. Okay, let's go to J-Bell Circuit, JBL. You got the numbers?
JBL. Let me pull up the chart. J-Bell Circuit. The numbers. They had earnings last night, so I got to switch my trusty Benzinga Pro to see what J-Bell Circuit did. And they had a 2-cent beat, 64.62, and a little better on revenues, $5 million versus $4.9 million. Stock selling off ahead of it. Dennis, any comments on the pre-market action?
I mean, it got hit last night after hours. It actually rallied a little bit. Then it got hit. Then it's kind of just settled in the 28.40, 28.50, 28.60 area. It was trading in there quite actively there last night. So it looks like they're pricing this just slightly, down from where it had closed.
Good support at 28. We'll see if it gets to test that level today. Okay, 8:15. We're going to bring in our first guest today. That's Marc Chaikin, the founder of Chaikin Analytics. We'll be right back with Marc. Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick and Spencer Israel. Oh, no, Spencer Israel. He's out in San Francisco. But we have Marc Chaikin on the line, and he is the founder of Chaikin Analytics. Marc, how you doing on this Thursday morning?
Great, Joel. How are you?
I'm doing well, doing very well. So let's talk tech here a little bit. They hit the FANG stocks, Apple, Facebook, you name them, and they bounce back. Just a healthy retreat here, or start of a longer term bear trend in the tech sector.
Well, I think you have to separate the sort of internet social type tech stocks like Facebook, Amazon, and Google from the real tech stocks like Micron, Lam Research, and Applied Materials. So Micron reported blowout earnings after the close on Tuesday, was up 8% yesterday. That spilled over into Applied Materials, makes semiconductor equipment. That was up 6.5%, made a new high. So did Lam Research. Those stocks look great, although overextended. Bearish on Amazon, Facebook, bullish underlying fundamentals, but I think that the blowout from, the blowback from the Russia scandal is going to weigh over them. This hasn't been factored into the market. Everybody assumes Facebook is sort of Teflon because it's become part of the fiber of American life. I'm not so sure, but if I had to go in one place, it would be to Facebook. Apple, Google, broken down technically, Amazon's the one I'm bearish on.
Okay. All right. Let's move over to interest rates and the dollar. TLT, boy, that got hit yesterday morning, gave a good boost to the XLF in the banks here. How are we going to get those prescribed interest rate hikes that Yellen was originally talking about, or is she going to sit back until the end of her term?
Well, I think the Fed is going to continue to be data-driven. What's driving interest rates, in my view, is the hope of some sort of compromise on a tax plan that includes some tax reform. So you've got 10-year rates that backed up from 204 to 234 yesterday. So 30 bips increase down from 260 at the February peak. What that's really driving is small cap stocks. Small cap stocks are sensitive to two things, the dollar and interest rates, and both of them have really moved dramatically higher here in the last 3 weeks. So the dollar, which had been making new 52-week lows, broke through its 50-day average on the upside, and that helps small caps versus large caps, and then interest rates are helping the small cap financials. So the question in my mind is, the IWM, the Russell 2000 small cap index, spiked up. It's its biggest up move in 3 months. The question is, what does this mean for small caps and large caps? And I've got a view on that. When you get big blowout moves in the Russell 2000, that's actually more bullish for large cap stocks going forward over the next 3 months. So expect the S&P 500 to start outperforming small caps again. Small caps should hold their own, but I think we've seen about 4 weeks of major outperformance from small caps. That actually bodes well for large caps heading into year end.
Marc, just talk a little bit more about the dollar, because I noticed that as well, and I always follow, I'm Canadian, my background there, so I always follow the Canadian dollar against the U.S. dollar, and the U.S. dollar has been strengthening there. Is that pretty much just, recently just because of, the Fed getting a little bit more hawkish here? Is that the reason for the strength, or is there other reasons behind this, and do you see this rally in the dollar continuing?
Well, I think the reason for the strength in the dollar is more related to interest rates moving up and the tax bill. Janet Yellen's statement on Tuesday was a little bit mixed. The first headline said Yellen says maybe we misjudged the strength of the labor market, and that was sort of meant to imply that they wouldn't raise rates. Then later in the day, they said it was a hawkish statement. So parsing the Fed is pretty difficult. I don't see the basis for a rate hike in December, which would be the next logical move. I do think that we now know they're going to start unwinding their balance sheet, but in a very, very mellow way. So I think that the Fed is really not in the picture right here. It's really what's going on in Washington with the potential for tax hikes, and maybe after that, if they can get their act together, an infrastructure bill. And that creates a little bit of inflation. That's not built into the picture right now because it hasn't happened, but it's certainly being anticipated by the financial stocks.
A couple questions coming from our chat, and I think these are some general questions there, maybe just talking about options. Fuzzy wanted to ask you about how you find premium in options, and then Johan Smith, maybe we can tie these two questions together. He wants to know about, just about shorting stocks, maybe through options, or, what kind of things that you look at? Do you look at short volume? Do you look at different ratios? Do you look at max pain? What kind of resources do you use?
Well, I think that option premiums are low, which means if you're looking to get protection or trade the market from the downside, you can do it very cheaply. I'm going to go back to one of my mentors, Justin Mamus, who was a famous market technician in the 80s and 90s. He said, never short a stock making a new high. And the reason is you have no place to put a stop. So if you're shorting stocks here just based on the fact that they've made new highs, that's really a 50-50 bet. I'm actually looking for the S&P to go 2650, 2550, 2650 by year end. However, if you do want to put on protection to maybe protect against a 2 or 3 week move here in early October, you can do it very cheaply buying a bearish put spread on either SPY or IWM, which spiked up yesterday. I just look at the premiums and the risk-reward ratio. I don't dive too deeply into the Greeks because, quite honestly, it's information overload for me. What I know is that you can get a 3-to-1 risk-reward ratio by putting on a bearish put spread in the SPY or the IWM. That means you can either protect portfolios very cheaply or you can trade the downside very cheaply. It doesn't mean you're going to make money, though, because you got to be right. And I think the market's moving higher by year end, with the caveat that we didn't get the September decline that everybody was looking for. Everybody is the key operative word. It looks like the whole world picked up on the weak September, years ending in 7, or a week into the October lows. Maybe we'll get that spillover in October here. There's an old expression, buy on Rosh Hashanah, sell on Yom Kippur. Yom Kippur starts tonight. If that works and you get any sort of weakness in October, you can get some short-term juice on the downside with one of these put spreads.
Mark, you must have missed my article that I did.
I did, Joel. I apologize. I've been on a road show.
That's okay. Because
that doesn't mean a six. That doesn't mean a 6-pack of beer, by the way.
No. It's just tongue in cheek. I did the article by Rosh Hashanah and by Yom Kippur, because this market. Yeah. If you get attention,
yeah, just buy.
yeah, because that's been the mentality of this market. Before we let you go, Mark, I just want to talk to you a little bit about this tax plan, because here you are, you have Chaikin Analytics, we're technical traders, we look at ratings, we look at all these different things. And I read some of the stuff that's going on. How does that factor into the Chaikin Analytics formula? Is that part of just your fundamental outlook on the market? Because obviously we don't pay a whole lot of attention to it. I just wonder how you take that information and use it in your analysis.
Well, Chaikin Analytics at the core is the Chaikin Power Gauge rating, our multi-factor quantitative model, as you know, on 5,000 U.S. equities. 3 of the factors in there monitor what the analysts are doing and saying. So if the analysts think that there's a likelihood of a tax cut, they know which industries are going to be best positioned to take advantage of that, and they'll start raising their earnings estimates, they'll raise their ratings. The technicals will start to pick up to confirm what the market is basically saying. So I let the market do the talking. And the financials were just waiting for this. They took some heat when interest rates dropped from 260 to 204 from the February peak. But I agree with you. You cannot parse Washington and stay sane and trade profitably, because it's like a weather vane there, and you don't know what the next wind, where it's going to blow is coming from. But if you monitor what the smart money is doing and saying, you can make some sense out of this. So for instance, I'm looking for small cap stocks where insiders are buying, because insiders have a good window for 12 to 18 months into how their company's likely to perform. If you get a small cap stock that's going to benefit from a tax cut and management really believes it's coming, then that's where I want to be. So the factors will lead me to the right place. But trying to parse the tea leaves in Washington is frustrating, and it's a loser's game because you're going to bring your own bias to the table.
Correct.
That's the biggest problem, what's known as confirmation bias. If you think we should have a tax cut and we're going to have a tax cut, that doesn't mean it's going to happen.
All right, we've been on the line with Marc Chaikin. He's the founder of Chaikin Analytics. Thanks for joining us. You're such a good interview. I'm not going to let Spencer interview you anymore, okay?
That's a deal, Joel. You'll just have to buy Spencer a good bottle of scotch and make sure that he's happy the night before.
Okay. All right. Thank you, Marc. We'll talk to you again soon.
My pleasure, Joel.
All right, 827, pressure on the S&Ps here this morning, having problems with the $2,500 level, currently trading at $24.99. Looking at the downside here, we have not much until we have Tuesdays and Wednesdays lows down at 92.25, 93 even. But we'll be looking to see where this market finds a bottom in about an hour and 2 minutes. That pre-market low will be focusing that on any follow through to the downside. All right, Dennis, we got some more earnings stocks to cover, rating stocks to cover. We have another guest at 8:35. So
all right, so we got a lot of information to try to get in here in 7 minutes. I want to go to Abbott Labs first. And Abbott Labs, ABT. I still own Abbott in my investment portfolio here. It's getting a big pop here this morning. FDA last night announced at 5 o'clock approves Freestyle Libre flash glucose monitoring system. So ABT is up 4.5% on this approval here. So, I guess it's going to be a nice product for them, and the official approval they're up on. I thought this was expected. I thought I'd actually read something about this before, but obviously the market didn't have it all priced in because Abbott's getting a nice pop. The reason I'm saying I thought it was expected, though, is DXCM, which has a competing product there, their own system there, is trading down 18 points on this. So maybe this wasn't expected. DXCM here is down 27% on this Abbott Labs approval. That's, a huge move here, and that's surprising to me because I did not think this was just out of the blue, but obviously the market did.
Man, this Abbott Labs has been dogged for a while. Oh, we have a reorg on this because they spun something off. So in essence, this is a new all-time high.
What are you thinking about?
Abbott Labs, because if you go to the...
He spun off AbbVie, 4 or 5 years ago. You must be really out on a long-term chart.
No, actually. No, this one hasn't corrected. This is a new all-time high from Abbott Labs.
Oh, yeah. It's been a monster. AbbVie, too. And I own both these. So I've owned Abbott Labs. I bought this back during the financial crisis in 2000 and... Oh, man. I'm going to say 2009 or 2010. And it's been fabulous because I got the AbbVie. So I bought Abbott around $48, and you can say, "Oh, you're only up 6 points." No, because I got AbbVie, and it was 1-for-1, so I got 87 points on AbbVie too. So I picked up not only the 7 or 8 points on this, I got another 87 points on AbbVie as well. So this has been one of my better purchases. I've held it all. I've never sold any of it. So I bought Abbott, and now I own Abbott and ABBV. And these are two premier companies here in biotechs and drugs. So sticking with them, aging population.
All right, let's just go to these Abbott Labs. I mean, do you want to say too much, too fast, Dennis? 54.
I kind of do here for Abbott.
Yep.
And that's, obviously I'm still, net long this stock. So, but, that being said, I think it's a little bit too much too fast for ABT. But you know what? It's trading some volume up here now. So, when it popped there last night, I was like, oh, way too much, way too fast. But it's been actively trading the 54. So it looks like it wants to try to hold on. We just know when these big drug companies come out with something that's kind of been known that's probably going to get approval, they get the pop. We've seen it in Merck multiple times. It pops 2-3 points. And when the dust settles at the end of the day, it's up 50 cents or $1. It's a big move. It's a big move for ABT. So I'm not buying it up here. I'll tell you that.
54.88. That's your pre-market high. Only 30 cents off that level. To fill the gap from yesterday, you need to come down to 53.08. That's $1.50. So that would be a great target on the short side if you're so inclined to take it. might be some size at 55. Dennis, is there any chance that the book holding this down for like a cheap open, or is there just not?
It's always possible, so that's always something to consider. I wouldn't be surprised if there is some stuff in the book. I mean, we've never been up here this high before, so that's always a possibility and something you might want to consider. And often I do that. If I think the book's going to hold it down, I'm going to bid it aggressively on the New York, and maybe you get a lower. Maybe it opens at 54, maybe it opens at 53.5 because the book holds it down. So it's possible. As the volume climbs, that possibility becomes less and less because 61,000 shares have already traded here in the pre-market. We're still an hour from the open. This thing trades like 150, 200,000 shares before the open. The book pressure from the open probably isn't going to be enough to hold it down.
And what's Dexcom?
DXCM, and this thing is annihilated. And I don't know if they've commented on this or not, but it's down. I just read from the pro. Dexcom down 22% pre-market following FDA approval of Abbott's blood glucose monitoring device. So also some downgrades, I guess, coming from it too. I didn't see who downgraded though, but DXCM is getting absolutely murdered on this, and Abbott Labs, I guess, coming in and competing with them.
Yeah, 49.30 trading on the lows of the pre-market session. Boy, we haven't been down in this quadrant since you had a low in February of 2016 at 47.92. So that could be a target. Another stock in the space, I want to see how it's reacting. Medtronics is big into the diabetes delivery systems and self glucose monitoring. The stock is coming off. Has come off 12 points here. Not how much they're hitting it in the pre-market, but
it's bid up at the pre-market, so I don't know if it's going to be a play here or not on this.
No, they are coming out with some new products here, probably competing with Dexcom as well as the new product out on the street.
It's a stock that I've always had on my radar. I've had this stock on my radar for years, and it's always one that I've wanted to have in my portfolio, and I wish I would have because obviously it's been a great performer here. I mean, even if I would have bought this back in 2012 or 2013, you could have bought it at $30. Now it's 77. So as it comes off, I am interested in this one. I was always interested in investing in this company here, Medtronic, but I've never actually pulled the trigger. It's one of those been on my radar for years, just never pulled the trigger.
Well, you pulled the trigger on a lot of good ones. All right, I
pulled some trigger on some bad ones too, though. Don't kid yourself.
8:30.
Whenever you're a trader, you're always going to have some bad trades too. And I'm going to say it once again. It's not about what you're making on your trades. It's what you're losing on your losing trades that will either, whether you'll be successful in this business or not. I've always been very good at limiting my losers, and I think that's why I've been able to be in this business for 18 years.
All right, 8:34. We got another guest coming up here, and that's Lydia Idem Finkley. She's a Forex trader and author of FaithMightFX.com. We're going to take a quick break, and we're going to bring Lydia on. So hold on for 1 second. Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elkanah, along with Dennis Dick. Spencer's out today, but he'll be back on Monday. We are on the line with Lydia Idem Finkley. She's a Forex trader and author of FMightFX.com. Lydia, how you doing on this Thursday morning?
I'm doing good.
Good.
Thanks for having me back.
That sounds good. Well, we're glad to get you on the show here. It's been a few months, and we've had some pretty good trading action in the dollar. We got a couple different things here to talk to you about, but Since we're stock traders and we know you keep a close eye on the S&Ps, could you just give us a quick assessment here of the S&P 500 and the overall market?
So I think equities are still bullish, and I think the only I think flag, and I don't know how pertinent it is this divergence with this new high that we got yesterday, and not really having the new momentum to accompany it. So it might be, maybe we get another small dip. I mean, all the dips that we've had, if you've been watching these divergences, it hasn't materialized into any significant dip. Maybe during the summer, we got the dip into the 2400 area, and that's it, which is, I use Fibonacci's, and so it's not a really significant pullback, but I mean, it went into support, and now we're at, all-time highs. So, I mean, I still think it's very bullish. I don't think it's anything to sell over. Maybe you stop buying stocks at these new highs, but it's certainly nothing to say sell what you're holding.
Just talk about that divergence a little bit more detail. What would you have liked to seen in the mechanics or underneath the hood in the market yesterday?
Yesterday, I would have loved to see that we got some new highs in divergence on the smaller time frame. So just looking at a 4-hour chart, we're still in bullish territory, but we're nowhere near the highs when we first cracked 2,500 a couple of weeks ago. So, I mean, there's a couple ways to read that. You can say, well, we still have, there's still some bullishness here, and we could still run higher, which I think is perfectly legit as well, which is why it's a small signal, because we've been having divergences. I would say this entire Trump rally has been filled with divergences, and we've had dips, but no real significant correction that I would be excited about to say buy stock. So I've just been holding. There's been as an index, I haven't seen an opportunity to buy more to put new money to work. But we've been holding since you've been holding what we've had for the last couple of years. Really stopped adding to it probably the beginning of this year, and so while it feels like we're missing because new money, we have a lot of cash, but it feels like we're missing out, but we have a lot of cash. We're really waiting for a nice significant dip. And for me, that would be below 2,400 if that could appear to put new money to work, but. We save it for individual stocks.
Yeah, I mean, you say got a little cash on the sidelines if and when the correction eventually comes. Let's move on to the dollar here. We'll talk some foreign currencies. And you said you wanted to talk about the British pound, and I haven't taken a look at that chart in quite some time. And it's kind of on the comeback trail. Discuss the fundamentals behind this move here, and the technicals, which you're looking for in price action moving forward. So
fundamentally, if you're following the pound, everyone knows about Brexit, which is why we got the big dip earlier this year, definitely last year after June, and now. Along with every other central bank, the Bank of England, I think, really shocked the markets by ramping up its hawkish tone, really setting the stage for an interest rate hike in the midst of Brexit proceedings and discussions. I think the market was caught flat-footed, thinking that amongst all the other central banks, like the Fed and the ECB, that the Bank of England would actually be, and the Bank of Canada, that the Bank of England would actually be more dovish or a little bit less optimistic than they had been. So I think what we're seeing now is a market realizing that Brexit is not going to stop the central bank from increasing interest rates if they need to. Also, inflation is raging in the UK, and something that I think the central bank can't ignore. And if wages pick up with the overall consumer price index, then I think, we could see an interest rate hike out of the Bank of England, which is why we're seeing the pound just kind of really take off here across the board.
I mean, do you find that, with the Brexit and everything going on, I mean, you really think that's the right prescription for the UK economy, rising interest rates?
Personally not, but the consumer price index is sitting at 2.9% as well. And with an inflation target at 2%, I really think the central bank's is between a rock and a hard place. And their government. I think the federal government would actually like to dial back and reverse this whole situation. It's not. It's turning out not to be the best thing for the British economy. So I think that we're starting to see a lot of backpedaling and trying to figure out how to do a Brexit in a way that won't really be a Brexit. And so the market might be actually responding favorably to that possible scenario as well. So I think central bank is more dependent on Brexit than it obviously wants to let on.
All right, let's move over to the Japanese yen. I know a lot of people like to follow the yen for movements in the market. Give us your take on the Japanese yen.
Okay, so the yen is back to actually being one of the barometers of risk in the market over the U.S. dollar. So that's been really interesting to kind of see play out here. We've gotten a lot of weakness in the yen recently, the past 2 weeks, which has been kind of surprising with there's a ramp up in rhetoric versus North Korea and the U.S. So that's been surprising to see the yen weaken. Market has stopped taking that seriously. So I don't think we'll see the market react to North Korea unless we get some real escalation. And I think we need to see military action for the markets to really get rattled by the North Korean tensions with the U.S. So as such, I don't know if you guys caught this news headline, but the Prime Minister of Japan dissolved the lower parliament. They're going to have a snap election next month, which I think is why we're seeing this continued weakness in the yen. And it's starting to stall out. I mean, it really ramped up last week, and we're starting to see a little bit of consolidation this week, which I think we could still see this thing head higher, see the Japanese yen head lower.
Okay, and just kind of mixing everything together with the euro dollar here. Pull up a chart of that, and then give us your long and short term outlook for the euro dollar.
I think the euro dollar is bullish, and I know this recent pullback has probably had some bears fleeing, but I think it's a really healthy correction. Actually, since we blew the top at over 120, I was looking for a correction. Well, I wasn't looking for a correction, but I thought if a correction happened, it would likely move into the 1700 range, which would be, a 300 pip move off the highs, which could have people second guessing the bull run. I think the euro is bullish. I think it's healthily bullish. I think after this correction, maybe even early as today, we'll start to see it move higher. And it goes right along very nicely with the weak dollar, which I know we've had a bit of a dead cat bounce in the dollar, but unless the dollar index can get above 94, I think the dollar can continue lower.
Yeah, do you do anything?
Which will just help the euro.
Do you do anything with the UUP, the Power Share U.S. Dollar Index Bullish Fund, or the UUD, or do you just stick to the outright currencies?
Yeah, I stick with the outright currencies, and I look at the DXY if I just want to see what the dollar is doing.
All right.
Isolated, which is not really.
We've been on the line with Lydia Idem Finkley. She joins the show to talk to us about the U.S. dollar. She's a Forex trader and the author of FaithMightFX.com. Lydia, great information as always, and we'll look forward to following these currencies.
Thanks, Joel. You guys have a good morning.
All right. S&P futures just hanging out above the low of the session, 24.99 down is the low, 2,500 and a quarter. So a little bit of range in the S&Ps, hanging out near the lows of the session. Let's bring Dennis back in. Dennis, how you doing?
Doing well. Just looking here at some movement. Let's go to the individual earnings reports, folks. We want to jump into those. And we did get, Jabil Circle we already talked about here, but we had a few big ones here from this morning. Let's go to BlackBerry, BBRY. It's getting a nice lift here in the pre-market. Another dog that is all of a sudden barking here this morning. Joel, you have those numbers?
Sure. Let's go to your report in BlackBerry. They had a nice beat, and let's give you that exact beat here this morning. They were looking for a flat quarter EPS, but they ended up making a nickel and a nice beat on the revenues. 249 million versus 221.18 million. Man, they don't make a whole heck of a lot of money, do they, Dennis?
Oh, well, they never. Yeah, it's the same thing. AMD was always the same story. They always, remember, we used to guess they're going to make a cent or lose a cent or make 2 cents or lose 2 cents. But, the stock prices still move around here. I mean, here's the expectations. Very low here. Stock has been beat up. We had a little good pop there back off the last earnings report, I believe we did back in just this, would have been May, June. I'm just trying to do the math. Maybe it was 2 reports ago, I was thinking, when we had the big pop back in May. And anyways, we pulled back significantly since then. We're going to pop here again. I'll just say, $10, a big psychological level. It got up. It had a big pop 4 or 5 days ago, up to $9.95. That's the level it needs to get up and over. Doesn't get up and over that, I'd be concerned about this leaking.
Do you know, I don't know if it was actually an earnings report, but do you know what put in that 1174 high there back on June 1st?
Was it in play?
It was a Citron tweet.
Rumors? What was the Citron tweet?
That they were like that BlackBerry was going to be taking over America and the stock was going to 100.
They had a bullish Citron. I didn't know there was ever a bullish tweet from Citron.
Chat, please.
Does Andrew Left make bullish tweets?
He did on
Wow.
Yeah.
I didn't know that. I didn't know he did bullish tweets. I thought he was just that the bubble buster. I'm going to have to find a new nickname for him then.
Okay.
Bubble creator.
Yes. 1174 is what it hit. And then,
we got to get him back on the show. We had him once. We got Andrew Left on here once. We should get him again.
Yeah, he's out on the left coast, so it's the time difference, but we'll definitely get him back. I'm just going to go with pre-market action here. Big move in shares of BlackBerry. Up over $10, 10.13 high, backed off, holding at 19.92. If I'm buying this stock off the open 9.95, I want to see it over 10. I want to see it through 10.13. I want to see it through 10.20 and just keep on going. If not, you've got a big move here over the last few days. 10 has been a resistance level in July, failed there 4 days ago. I'm not sure what the reason of that big rally was, but 10, not only is that going to be an important level for today, but moving forward to see if BlackBerry can regain some momentum.
Jumping over to Accenture earnings, grabbing them from the pro for you. Accenture reports Q4 GAAP $1.48, which may not compare to $1.47. Sales of $9.1 billion versus $9.01 billion. So it looks like a little bit on the top, a little bit on the bottom. It's not good enough because their guidance, fiscal year 18 GAAP, they're seeing 636 to 660. It looks like analyst estimates are up near 650. So it's kind of get a little bit in there, but it could be to the words the lower end as well. So the guidance not fabulous either. And the stock getting hit slightly here in the pre-market. It's down a couple of bucks. If this ever was to fall and continue to fall down, that 130 level where it broke out from originally in September here, that's huge. So I don't know if you're going to get all the way back down there. I don't know if the report's bad enough for that. But again, it's all about scenario analysis. And I think if it got down there in the lower 130s, I think you find lots of buyers.
All right. Dennis is going with the 1 to 30 number. I'm going to step up ahead of him a little bit and give you a level to keep an eye on based on the pre-market action. Your pre-market action shows you a 134.05 low. You go to your daily charts and you can see 1, 2, 3, 4 lows right in that area. So that's the key. Holding 134, you got a chance of a bounce. Below 134, there's your air pocket between 134 and 130. So a couple good levels here for you in FAACN. Did this stock trade down to a penny during the flash crash?
Yes, it did.
Yes, it did. Okay.
Somebody got a great buy down there. Unfortunately, they had it busted about 2 hours later, so their buy was busted. But yes, this was one of those, I think, 360 stocks in the flash crash of May 6, 2010 that traded all the way down to 1 cent a share. That is called a stub quote, where the market makers, and I think the stub quotes are usually putting them a little higher now, although I still see them every once in a while out there. But that's a stub quote, and that's was just a market making fulfilling their obligation, because they always have to make a two-sided market. And if they're going to the bathroom, if they're not around or something, and they just want to just have that two-sided market being made, they just always have that 1 cent bid out there, and they were fulfilling their obligations. Now the obligation's been tightened up a little bit. They got to make a little bit better market than that. But that was the stub quotes, and a lot of that just showed you the book was completely empty, and marketable orders were just going off at the bid. Now we've put in band-aids like circuit breakers and different things, so that can't really happen exactly like that anymore. But definitely a chaotic event for everyone there on May 6, 2010.
All right.
Conagra reports 40 CAG 46 versus 40, 1.804 billion versus 1.79 billion. That's a beat on the top. That's a beat on the bottom for food stock. We've been seeing these food stocks getting destroyed, so it's nice to see a food stock actually have a beat. They reaffirm their guidance too. Adjusted EPS at $1.84 to $1.89. Analyst estimates at $1.86. They do see sales down 2% to flat. So a little bit of bad news kicked in there. It's up a little bit here. I mean, expectations very low, especially after we've had some disaster reports from General Mills, and then we had the Kellogg downgrade, and it was ugly too. So Conagra bucking the trend a little bit here, but I don't know if I'm getting that excited.
All right. Is it bid up, offered down? What do you?
Bid of 34. So it's bid up. Only 650 shares are traded. It is bid 34, offered 34.75. I mean, so it looks like it wants to go higher here. And, I think, the report's good enough that it could, especially with expectations as low as they are. But I don't think this thing's just coming and blasting off into orbit, because these food stocks, there's a lot of overhead supply. There's a lot of people underwater significantly that have been buying these things as value plays. And they have not been good value, not as of late.
Well, if you get back down into the lower 33 handle, you can see multiple lows there. And then it kind of has been 33 to 34 over the last 6 sessions. So if, in fact, that's a big bid and that can hold 34, you got air up to 35. If, in fact, someone comes in and smacks that bid at 34 and you start to retreat, I mean, you do have a gap to fill from yesterday's high at 33.34. But to me, the real major support comes in at the quad of lows at 33.
Okay, John Dodson wants us to take us back to DXCM, and we're going to get these other ones in the chat here as well. I just want to address something here because it's a good teaching tool. It's also just, an opinion, obviously, mine, but stock's down 30%. So it's getting crushed here. Can there be a little bit of a bounce? Yes, but there's so many people that are getting murdered on this, 922,000 shares. So John Dodson just saying, is this an overreaction? And basically saying, maybe, we should be coming here and buying this thing overreaction. I will say, I said this again in last week. These things typically don't work themselves out one day. So EFX, the greatest example here, and obviously completely different story. But look, it took 5 or 6 days of going down. If you were buying it after that first day, you got crushed. So I always like to let the dust settle. I don't like to be the one coming in here and saying, okay, 47's too cheap, I'm calling the bottom. I've done that myself a million times, and I'm usually always wrong when I do it. Because, sometimes you're going to get lucky, sometimes you're going to get the actual bottom, sometimes it's going to bounce. There is going to be 2, 3, 4 point bounces in here. When a stock falls 20 points, it can bounce 3 or 4 points easily. But when the dust settles, usually these things tend to not bounce right back immediately. I don't see this thing go back to 50, 60, tomorrow. So that's a consideration here. There's usually a second chance to get the stock near the lows. If we use EFX as an example, completely different fundamental story, but a stock that got killed, you had multiple chances in the low 90s, 1, 2, 3, 4 times. Really it made lows in that 94, 95 area before it started to find life. That's what it needs. It needs a couple days of consolidation in an area there, and then, maybe you strike, because then you have an out. Right now, it's just like throwing, darts. Who knows where the bottom is? But if you can get a tradable bottom, if it can put something in for a few days, that's when I would strike. If you're looking to buy.
Yeah, if you're looking to buy. Also, on this one, I'll take a page out of Nick Shaheen's book here, and there are going to be just pumping the premium in those puts today, right? On a move like this, market makers are pulling their hair out. They're stuck on this, or whatever traders that are, short puts. There could be a lot of blood on the streets on this one. So what I would do, I'd pick a level here, since I'm just going on the monthlies. I'd say 43.45. That was your low. You're going all the way back to November of 2014. Maybe now, if you want to own it outright, you sell a put. If you could sell a 43 put for $5, you're covered down to 38. Or, man, you could sell a put spread or something and have yourself protected on the downside. But just as far as just going out and buying the stock, if you got good risk reward ratios and you're quick, you can do it. But if you're looking at this as a longer term play, I would urge either, a cash secured put where you want to own it, or selling a put spread, because what's going to happen? This thing eventually is going to settle down. It's going to sit for 4 or 5 days, and the people that own calls are going to lose money, and the people that own puts are going to lose money.
Well, there's a point to be made there too. Premiums will come in. Premiums will be wild here, you're right, for the next couple of days, and they will come in as volatility starts to decline. This volatility is right, I'm crazy on this thing right now. So it's a great point to be made there too. I think you just, the point I just want to make is it's so tough. Like, this is what everybody gets attracted to. The biggest movers, they get attracted to the big money. Where can I make money the fastest I can? I'll tell you, the reason that I've been successful in this business, and I have, because I've paid my bills for 18 years just by trading. And the way I've done that is avoiding stocks like this. I trade boring stocks where I've got setups. And there's no setup here. I mean, the thing just collapsed 20 points. Where's your setup, really? Could you catch a bounce? Yeah. And do I do it sometimes for fun? Yes. But my bread and butter is trading stocks: General Electric, Johnson & Johnson, Coca-Cola, trading stocks like yesterday. So, when you've got, the TLT getting crushed, some of those REITs are probably going to be down. So it's just knowing the relationships. Most of my money is based on relationships. Most of the money I've made in trading. And if you can understand the relationships, how this affects this or this affects that, that's, an edge. When you're just coming in here and saying it's down 29%, it's got to bounce back, it doesn't have to do anything. EFX was down 20 points on the first day. It didn't bounce back. It went down another 30 points. So, that's the one thing you got to consider is the stocks don't have to do anything. They can do whatever the hell they want. And there's a lot of risk in this right now. And I am risk adverse. Everybody always thinks like, you're a trader. And, all my friends think that. Oh, he's a day trader. He's a gambler. I will tell you, I am the opposite of a gambler. I might trade for a living, but I don't like taking gambles. And do I have to make calls? Do I have to take on some risk? Yes. But I try to minimize the risk as much as I can. Whenever I enter a trade, I never think about how much money I can make. I think about how much money I can lose. And I define my out ahead of time. Where is my out here? If I buy this thing at 47.35 right now, where am I saying I'm getting out? I'm going to give it a point or something. Well, there's going to be slippage. There's going to be other things. Maybe it gets down there and you start thinking, oh, well, I just bought, now I'm down $1 in like 10 seconds. What am I going to do here? It's hard to manage the risk in something like this. In General Electric, a lot easier to manage the risk in something like that. In Coca-Cola, Coca-Cola was a great one yesterday. I mean, TLT was down. Coca-Cola has a very high correlation with the TLT. It got beats yesterday because the TLT was down. You might say, oh, was something happening fundamental with Coke? No. All those stocks with the bigger dividends got hit. Procter & Gamble got hit. Coca-Cola got hit. I don't know why AT&T, Verizon didn't get hit. Those were two that I said would go down. They did not. I have no idea why those didn't get hit. Typically, they would have, but they didn't. But, you can't get every stock right. But I was able to make some money on some other ones. And, the AT&T and Verizon didn't work out as nice as I thought they would have. But they did open down. But buyers came in there. Maybe there's still something going with the T-Mobile. Sprint still helping it out, but I'm not sure why T and Verizon got a pass yesterday with the TLT down that much. But knowing those relationships is how you make money in the long term.
Real quick question here on the Mickey D's upgrade here. Boy, oh boy, Dennis. I mean, here you are, a stock that came off that's 161 and change, all-time high. Came off hard. Now you're getting an upgrade here. I mean, overhead supply, is that what you're thinking on this one?
Yeah, and sets up well. This thing gets up to 156. Think about it. got killed yesterday. Everybody who's buying at that bottom at 156, got crushed. Again, McDonald's gets hit yesterday because it's a little bit of a dividend play, a little bit defensive, a little bit more correlated sometimes with the TLT than with the SPY. Now, it's kind of a mix. It depends on its mood. But, as of late, I would say it's correlated more with the TLT than the SPY. And it's getting a nice pop. Pop right now, overhead resistance here. 155 feels a little early. I think, it is an upgrade from Longbow, but I think I'm fading this upgrade. Sorry, Longbow, I'm fading you guys on this one. I think it gets up there in the upper 155s. I think it finds a wall of resistance, and I think it's a good shorting opportunity for Mickey D's.
All right, folks, we ran a minute over here, so we are just going to wrap things up for today's show, Benzinga's Pre-Market Prep. Thanks, everybody, for participating in the chat. We hope you enjoyed our guest, and we'll be back with you again tomorrow morning. Have a good day.